We've seen, as a consequence of the insufficient investment in energy production, and as a consequence of the rebound of COVID-constrained travel, and now as a consequence of the supply shock, the oil price increase in a year and a half from $30 a barrel to $130 a barrel.
All right, Rick, I want to get your reaction to this news. President Biden saying that the U.S. will ban imports of Russian oil, liquefied natural gas, and coal imports. The U.S.'s move is going to be matched in part by the U.K., which announced a ban on Russian oil imports, though it will continue to allow natural gas and coal in from Russia. Other European nations that rely more heavily on Russian fuels will not participate as of yet. So let's start with getting your reaction to this development.
Well, many responses. From a geopolitical point of view, this is obviously an escalation. One wonders if the Russians might take at least the symbolic step of cutting some other countries off. Nobody wants to see an escalation of hostilities, obviously, but that's above my pay grade. But I'm obviously distressed about the circumstance in Ukraine for reasons that are other than financial. From an economic point of view, this makes the interview that you and I did 8 or 9 months ago strangely prophetic, where we were talking about the fact that the investment in industrial materials, particularly oil, had been insufficient to withstand any shock in the supply chain. And we're obviously seeing a fairly major shock in the supply chain. We've seen, as a consequence of the insufficient investment in energy production, and as a consequence of the rebound of COVID-constrained travel, and now as a consequence of the supply shock, the oil price increase in a year and a half from $30 a barrel to $130 a barrel. This has the economic impact across the broad economy of being a broad tax. It's bad for the economy as a whole. It's important to note that this will do astonishing things to the free cash flows of oil and gas companies, which were already very rich. I anticipated before the Russian invasion of the Ukraine that the market capitalizations of a select group of North American oil companies were trading as though oil were at $55 a barrel. That is to say, when oil was at 75, the oil stocks were already substantially undervalued. I don't know how long this price level can last and whether it will go higher, but I can say that this will do really astonishing things for the free cash flow of companies that produce oil and gas, substantial amounts of oil and gas outside Russia. And I'm not talking about having to go down the quality chain all the way to the Toronto listed penny dreadfuls. I think this impacts the Exxons and the Chevrons of the world. And investors, first of all, need to pay attention to that.
All right, before we get into that, and as you quite rightly said, you and I did discuss the lack of investment into big oil and gas about 9 months ago, and we see how this is playing out. Of course, it's not only been that, it's also been the Biden administration having really tough restrictions and regulations on the oil and gas sector in the move to decarbonize. That's also hampered the growth of the sector at large. But before we get into that and the larger ramifications for the U.S. economy, and of course the gold price, which we saw spike to a new intraday high today on the COMEX futures, I do want to get your thoughts on how you see this war playing out. Now, I know it's hard to speculate, but you are a legendary speculator, admittedly, when it comes to markets. But I do want to get you to weigh in on how you think this plays out. Now, it's hard to imagine Putin backing down here. How do you think this situation gets resolved? What do you think happens next?
I hope the West gives him a way out of his corner, a way to retreat. I hope, given that the reality on the ground would seem to be that the Ukraine won't enter NATO for a substantial period of time, that, among other things, is offered up as a concession. I hope, too, that the Ukrainians understand that there isn't the political will in the West to defend them physically, and that their ability to defend themselves over long periods of time from Russia are constrained. So my hope is that saner heads around the world prevail and some inelegant, messy solution is found. I'm betting that that's the case, partly because the alternative to that is really too ugly to consider on an awful lot of fronts. You don't want to see more Ukrainians die. You don't want to see more Russians die, for that matter. You don't want to see the potential for nuclear conflict between Russia and the West increase. And so my hope is that citizen pressure on all parties leads to a negotiated ceasefire. And I think that's what's going to happen.
Right. As you were saying, this war has not played out as Putin expected so far, the Ukrainian resistance being a lot tougher than he anticipated. Now, you mentioned some alternatives, and of course, they're very ugly and disturbing scenarios. And billionaire hedge fund manager Bill Ackman, he's warning that World War III has already likely started with Russia's invasion of Ukraine. And he points out that Russia invaded Georgia in 2008, a move that saw a remarkably muted international response. Then in 2014, under Obama, when President Biden was then vice president, Russia invaded and annexed Crimea. And now we have this invasion. And Ackman thinks that we are in what he is calling the early innings of Putin's global aspirations, and that with each victory, he's emboldened to take more. He thinks he's testing the West here, Rick. Do you agree with Ackman? Do you think World War III has started here?
I don't. I think Putin may be a little smarter than Mr. Ackman believes. I think that Putin was, I think that he probably believes that his hand was forced in the circumstance. And I think that he has been surprised by the lack of conventional capabilities enjoyed by the Russian forces. And I think, too, that Mr. Putin, as a politician, didn't understand enough about the Russian economy to understand the real pain and the fact that he will, sooner rather than later, be unable to afford this war. I'm reminded of lesser combatants, which is to say Eritrea and Ethiopia, which don't like to admit it, but their war 15 or 20 years ago ended up because neither side could pay the gasoline bill. They literally ran out of fuel. And I suspect that the exiling of Russia as an example from the SWIFT system and the inability to do what they do well, which is sell raw materials to the developed world, means that the economic dislocation that he faces, including his ability to wage World War III, are much more constrained than maybe Mr. Ackman believes.
All right, well, let's focus on how Russia can potentially pay for this war. And there is some speculation that Russia may sell off its gold reserves to fund this military campaign, $132 billion worth of gold reserves. That, of course, would have an adverse impact on the price of gold, which has enjoyed a rally up until today. What are your thoughts there?
Well, given that I'd like to buy some more gold from a personal point of view, I hope that comes to pass. He will have to do it carefully, meaning he has to turn the gold into things that he can use. There isn't enough trade on a global basis in renminbi, as an example, that he could convert the gold into renminbi and then the renminbi into stuff he needs. The fact that he is frozen out of US dollar denominated trade on a global basis and frozen out of the SWIFT system is turning out to be a much greater detriment than he had thought. But it might be that the only fungible asset he has for sale is gold, irrespective of the difficulty, that is the only thing that he can pay his bills with, in which case I would suspect that whether he wants to or not, he would have to sell it.